Good morning, traders. Hope you're all good. I just want to quickly show you and explain to you the trade that I took on Tuesday, the one that I also shared in the morning analysis, and that was shared in the Telegram group and on YouTube. And I just want to quickly show you why I took the trade and what was the entry criteria and reasons and so on. So basically, this is Monday's price action. We had a Sunday open over there, this pink line over there. So Sunday opened, we had a push down, and then we started trending towards the upside. So we're above the Sunday open, so I'm expecting price to keep on moving on higher. As long as we're above this pink line, I am bullish. I'm looking for buys. So that's the one thing. Second thing, noticed a few things. First, we have this low that was formed in New York session. So if we just look at the time zones and the sessions, this blue line is the New York session, and that is the low that was formed in New York session. So we have the New York session low. Why is this important? Well, because there's often liquidity below that low. And if you want to know the indicator, it's just this one, ICD Kill Zones version 2. So if you want it, you need to ask me in the comments or ask me in the message. That's the indicator that's used for those sessions. Okay, so we have that area as an area for liquidity. So one thing that I need to stress and need to just say it out loud again and again, I like to trade and I prefer trading from 1 hour liquidity areas. So where is the liquidity on the 1 hour? Because I'm intraday trading and I'm looking to take trades on the intraday spectrum, 1 hour liquidity is all I need to know and know where it is. Okay. We also have this relatively large zone, which is the 1 hour order block. Push down, then we broke structure, but it's not as clean because ideally you would want to see price be a bit higher. No, not that one. Price come a bit higher, pull back, and then the break of structure that you would expect to see over there. But instead price pushed up, consolidated, and then pushed up again. So I was also looking for price to potentially mitigate this area, come into this area for the long. And then obviously we have the liquidity low there as well. So ideally we would want to see price sweep that low because there's liquidity. That's just a rule. New York low is liquidity, and then continue up higher. So then we can also use our premium and discount tool, and we can see that if this extension moves towards the upside, this area is very nicely situated in the discounted area. So it's already setting up nicely for a price to go higher and potentially give us a beautiful trade. So then on the 15-minute, we need to look at price action and see what we can deduce from the 15-minute. Okay, on the 15-minute, we have now this line showing Frankfurt Open, just drew it in, 8 AM GMT plus 2, and London Open, 9 AM GMT plus 2, for those wondering. And there we have also a candle that can possibly act as an order block, because here we can now see a clean structure break towards the upside, and we have trend line liquidity over there, basically liquidity all around here, because it's really consolidated and moving sideways, which is a very nice thing for us. Relative equal highs, so there's liquidity above it, so that's cause for price to go higher and reach for that liquidity. So you're constantly looking for cause and effect. So we know we have liquidity potentially here, and we have liquidity above there. So that tells us that if price reacts from this area, it's going to potentially go to that area. And that's a big enough range for us to capitalize on. So we can easily measure this and see that more or less from this area to that area, 60 pips, 70 pips. So there's enough range for us to move in to get that potential setup that we would want. Okay, so Frankfurt opened and London opened, and we had a nice push towards the downside. Now the question is, where do we enter? This is not a wick, just take note. It's that line, there's a big wick. Where do we enter? We see this push down, and then we see now price pushing back up, reacting from this area. So possibly this could be then a viable area to go long from. So if we look at the 1 minute now, so we have different things setting up. We have a relatively clean sweep, meaning that we had a low, price swept it into the order block, and then we broke structure towards the upside over there. So there is our structure break candle. So now we can look for price to come back, tap into this area, and then possibly long. So this is ideally, we can take a range, and we can potentially take a buy from the midpoint of that range, stop loss below these wicks, and then the trade profit all the way up towards the upside. Let me show you what happened. Price came down, tapped in, but quite aggressively. So you can see this was a structure break, but it was not just a structure break, it was also a reaction from this order block after we had this structure break. So we had a structure break, an impulse down, a slowly correcting move coming back up, and price taps into again and then reacts of it. So you need to constantly compare the bearishness with the bullishness. Which order flow is in control? We have to ask ourselves, will we often see a quick reaction or a slow reaction? Meaning, will price take some time in that area before it actually moves away, or will we see price just go in, tap, and move in the opposite direction? In this case, we're still identifying that price is still reacting. Let's call this supply, just for sake of ease and for everyone to be on the same page. Price is still reacting from the supply areas. So basically, this structure break does not count, meaning because it's in a supply area. So if we react of this area, it's most probably that price is just going to be going lower. And if price is going to go lower, it's most probably going to still sweep the New York low that we have over here, this red line. So we can't take a trade here because the battle between supply and demand is still underway. And we can see that the supply is still winning. We're still seeing price making stronger moves towards the downside. Move down, push up again, and we can see price starts to break down. Again, we came back to this area, mitigating the zone. If you remember zone mitigations that I've spoken about many times, we've mitigated the zone now completely, and now we are moving down lower. Now we have a sweep of this London low, New York low from the previous day. Now we can start to look and see what is price going to do and give us a cleaner indication. So now we have potentially another sweep. So for this sweep to be viable, we need to actually break and close above the most recent level of supply. So we need to violate this area. We need to really crush it. Otherwise, price is just going to come back towards the supply area and then continue down lower. So we need to make sure we're on the right side of price and the price has shifted before looking to get involved into the market. Okay, finally, we can see now the price has pushed up into this area and we saw a reaction, pulled back, saw a reaction, but ultimately you can see very clearly the price was actually just still making higher highs in this area. Price was moving up. And we can also see prices moving up over here, making higher highs, higher lows. So that's some evidence that price is potentially now making the shift. And you can see how price has lost momentum. We had a strong push down, and then you can see how price kind of starts to even out, and we see price slowing down and starting to move sideways. And that is exactly what we want to see. Build up, price getting ready to make a big move. Now you can ask yourself again, now we had a new structure break. Let's just actually use this line. We had a new structure break. There's nothing really on the left that can we can possibly do this, but this area has been tested many times, so I'm not going to do that. Now we can possibly say that we had this structure break, clean break, but where was the origin of the move? You cannot use this candle. You might feel like you want to. Why not? Well, because there's still a lot of liquidity down here. So you have to ask yourself constantly, where is the liquidity extreme? Where's the extreme point of liquidity in this scenario? Well, basically, it's at the bottom where price originated from. So there's still something happening here, so we can't just take this level, because chances are the price will come down, maybe give a reaction, but just go lower to react off of these levels, maybe even this level towards the downside of here. I'm going to tell you now why I'm not thinking this level, because this series of down candles was the last down candles before we had this series of up movement. We came back to test it, not 50%, but potentially we can then see price come back into this level. So we have this area. We've tested the liquidity point, the New York low, second time over there, and then we had a reaction towards the upside. So now we would want to see price come down a bit lower, possibly react from something within this area. Something within this area. Why do I say this? Because you can see this candle was the last candle, and then we had a big move up, breaking this minor structure, and then we came down impulsively, but we couldn't follow through. There was no strong enough momentum from this point to carry on further towards the downside. You can see we had a small pullback, and then you would expect price to go lower after an impulsive move like this. But what does happen? Instead, price pushes up, fails to break this low, and starts to trend towards the upside. So that tells me that there's something interesting in this candle, something interesting in this area that could possibly be acting as a zone or an area for me to potentially take a long trade off. So that's then how we setting it up so far. So potentially waiting for price to then come back into this area and then take the long towards the upside. Okay, price has now reached this area. We had a big push towards downside. You can see we had the small reaction off of this area, but then we pushed down even further towards the downside. We had a small reaction off of this area, so potentially you could have used this candle as your zone, but just needed to account for the low of your stop loss. That could have been definitely been an entry, most definitely. But then the entry, that was the one that I took, is in this area at the 50% mark, and our stop loss, let's just close this down, our stop loss just below the area for 4 pips. So just below that low, plus adding a pip or so, and then looking for upside targets. So quickly let's jump to the 15-minute and just look at upside targets. So potentially the upside target is the previous day's high, which is over there, giving us a 14 R&R trade. So let's just jump back to the 1 minute and see how this then played out. So we had the reaction, small reaction over there, yes, and then we saw the bigger picture, price running up, getting some momentum. And I'm going to show you something about this now as well. You can see price building up, building up. This would often be the case before a big explosion towards the upside. We need to be careful of this area, because if we're on the wrong side still, by some miraculous, unfortunate event that we're on the wrong side, price could react from this area, give a pullback, and you could possibly see something like this, where price pushes up, pushes down, reacts from something in here, and then goes higher. So that is something that we need to take into account as well. So we do see price trying to push up higher. We see price coming up. Eventually we had a reaction of that area. Price failed to break all the way towards the downside, but we did expect that reaction, so we were prepared for it. But we do believe now that we are on the right side of the order flow. We had this whole big build up. We saw price slowing down. We saw price getting ready. And then price gave us what we wanted to see and started pushing towards the upside. And then once you're on the right side of the momentum and once you are on the right side of the order flow, it's no difficult thing. Then trading looks and feels easy because you've been patient, you waited for the scenario to play out, you've waited for it to set up, and then it's all about being patient and waiting for your target to hit. Obviously you can take partials along the way. There are various areas where you could have taken partials from this order block over there. You could have taken partials, and you could have taken more from this one over there. This does not need to scare you. This is just London, New York Open opening up, playing around, messing around. This is not a problem for us because eventually, what do we see? Price builds up and gets ready to move higher. Price doesn't go below this level. You can see price respects this order block. So we're still on the right side of the order flow. Price is still respecting our areas and moving up higher to eventually then hit our take profit. First take profit, I must say, because I had, you can remember the screenshot that I shared, the last take profit was in this zone over there. Here's wicks. And we had this beautiful, nice push towards the upside, which then it take profits perfectly for a 28-hour trade. So I shared this idea in the morning analysis, and I hope you guys looked at it and tried to anticipate it as I did over here. It was a beautiful trade, absolutely magnificent. Such a good trade. You don't always get them, but when they come around, they are beautiful, and it's really a joy to take those trades. So I hope you guys had a wonderful day. I hope you have a great day. Happy trading, and then yes, see you in the next one.